Well, welcome to the Rob Elliott podcast, where we talk to ordinary people who have made a massive success of their life. Today, would you believe we're talking to a New Yorker who now lives in London, who is an absolute, what you would call an expert when it comes to finance, money, all that to do with banking. And he has ridden the roller coaster of life, both personally and in business. And he's come out of it at the other end in the most amazing situation. Welcome to the podcast, Peter Plaut. How you going, mate?
Rob, thanks so much for having me.
London, in this time of the year, what's it like during the pandemic?
Very similar to your home, we're going through a second stage of lockdowns, unfortunately. The northern part of England is really facing the worst of it with, lockdowns from 8 at night all the ways till the next morning. And pubs and restaurants are under a lot of pressure. It's just a matter of time before, sitting here in London, we'll likely see that again. And obviously that leads to a big humanitarian crisis. So it's tough. The weather is holding up a bit. There's days of sun in rainy London. So hopefully we'll have some sun for trick-or-treating. Halloween's just around the corner.
So what part of New York were you born in, mate?
So I was born in Brooklyn.
Yeah.
When Brooklyn wasn't the posh thing it is today. It was a much more difficult, rough and tumble area.
Yep.
And after I was a young boy, we moved to northern New Jersey and then back into Manhattan.
Yeah. So do you remember much of living there?
Well, absolutely. I mean, I spent majority of my life, or the first part of my life, being born and raised in the New York metropolitan area.
Yep.
Went to university there and then came back after university and spent a few years there until I moved to London in the late 90s.
So which uni did you go to?
I went to an engineering school in upstate New York called Rensselaer, which most people know about, but it is the oldest engineering school in the country.
Yeah. And is that where you also got a little bit of a taste for money and finance?
No, actually not. I sat around with all the geeks around me, and we were focused on computers and math, and I said, "There's got to be a better way." Unfortunately, that was in the mid to late 80s, and unfortunately, if I was smart, I would have stayed in the geekdom of computers and stuff rather than moving my way to Wall Street to make the fast buck, because we all know how the internet and technology turned out.
Yeah, that's how true. Now, most of us that have gone through our lives have had some parents who pushed us a little bit hard and always tried to do the best for us. Do you have any fond memories of what your dad or that encouraged you to do that you probably didn't like at the time, but looking back now, they were pretty well on the mark?
I tell you, some people ask me, who's your mentor, people that are your idol looking forward. And, I could say Warren Buffett, Steve Jobs, founder of Microsoft, et cetera. But the reality is it's been my dad, and it's because of the principles, Rob, that he laid out, which is work hard, take care of your family, work hard, love the family. And so he really is my idol. And I would say the same thing about my mother. The two of them just really instilled in me a good sense of family and togetherness and working hard. So I grew up in a privileged situation in terms of we didn't have a lot of money. Yep. But my parents always made us feel like we did, and just to work hard and to appreciate each other and appreciate what you have. And so those are kind of the values I still instill in my children today, and I have 6 of them.
Wow. I remember growing up myself, one of my best mates, his parents had very, very little money, but the most love I got outside of my own home was when I went to their place. You walked in, door was always open, cuppa was there or cold drink, didn't matter what time of day or night, and you just felt safe. I think we've all been privileged if we've had parents like that or friends with parents like that, where they just open the door. What did your father do?
So my father, graduated from the same university as I did, and then he went to school at night for many, many years. He worked as an engineer. He started his career at Con Edison, one of the utility companies. And we struggled for quite some time. But again, as I mentioned, he always made sure that my sister and I were able to go to summer camps and ski in the winter time. And
Oh, wow.
my mother was always home there to help us with our homework and stuff. And I'll
Yep.
tell you, to this day, I still speak to my parents. I'm lucky enough to have them at least once or twice a day.
Oh, man, you're so privileged, so privileged. So when you finished uni, did you go straight into engineering job or did you go and look at some other stuff?
No, I actually got the opportunity to go work on Wall Street
Yeah.
um, in the late 80s. And I did that. And I took up a role in research working on the trading floor at JP Morgan.
And so was it as wild as they made it out in the telly movies?
I think if you read the book Liar's Poker that talked about Salomon Brothers, which was my next stop at JP Morgan,
Yep.
it's pretty much true to form.
Would you say, a lot of people say that back in those days, a lot of them lacked ethics. Would you say that'd be pretty true, or they were just chasing the almighty dollar?
Listen, I was fortunate to work at some of the best banks and investment banks on Wall Street back in the late 80s throughout the to the late 90s. And I would say I didn't see that whatsoever. Some of my colleagues and stuff held the most highest ethical and moral characters.
Awesome.
Unfortunately, you see certain things in Hollywood in the movies that
Yep.
portray one bad apple, and that kind of sits to taint the entire world. And we saw the same thing happen in the global financial crisis in 2008-9,
Yep.
which does not permeate the industry, what a few individuals or firms have done.
Mate, that's great to hear. I was working in the domestic money market in the 87 crash in Sydney. And I was only a very young fella there. And I remember them locking the building down and we weren't allowed on the trading floor. And it was all very scary for someone who really didn't understand what was going on at the time. And I had no idea how that ripple effect of that financial crisis was going to go through the world, let alone Sydney. And I remember walking out late one night, and normally the bars are always full in central Sydney, and the bars were full, but they were eerily quiet. As in, it looked like the traders and the guys in the finance industry just were like shell-shocked of what was going on. Like you, most of these guys where I was working were of the high ethical standards, and they just didn't know. I don't think they'd never seen it before. So you had that wild ride in New York and you learnt there. How did you then end up in London? I mean, that's a long way from New York.
So, I started my career because I had the engineering background in research.
Yep.
And so I started as an emerging market research analyst back in the late 80s, early 90s, and was traveling around the globe writing and researching about different countries and emerging markets, mostly in Asia at the time, a little bit in Latin America. And I had the opportunity to move in 1997 to Korea.
Yep.
The Asian crisis. So I spent a good deal of time in Asia. And then 2 years later, we had the long-term capital hedge fund crisis, followed by the Russian crisis.
Yep.
They moved me to London. And shortly thereafter, we had the telecom and internet bust. So I was fortunate enough to be able to move with Salomon Brothers, and following that, Bank of America, to run research for them in London.
So what was it like living in Asia and in Korea?
Well, at the time, I was in Asia before we had the massive success of Asia.
Yeah.
Shortly thereafter, so 97, we saw the Thai baht crisis that followed by the Korean crisis, and most of these countries were bankrupt at the time.
Yep.
However, again, going back to ethics and character, the steadiness in terms of work ethics, in terms of hard work and such, within a year or so, maybe a year and a half, many of those economies were back on track again. And, we had the success story of the Asian tigers. So when I was there, it was a very difficult time for many of the countries and the people. But they, kept their head down. They worked really hard. And, now they're a massive success story for the rest of the world.
Would you think most people do say about the Asian continents, because a lot of Australians do go over there from here. We're not that far from most of Southeast Asia and Asia. Their work ethic and also their beliefs around when you say you're going to do something, or if you commit to do something, that's it, your deal's done. You think that's one of the reasons why they are so successful when they've come from a crash and they get in behind each other and have rebuilt their country so quick?
Listen, I think it's a testament to all people, and I try to instill this into my older boys
Yeah,
of my 6 kids. Life has its ups, life has its downs.
yeah,
You really need and to do two things. You need to find a career that you're passionate about, and
yep,
you'll never work a day in your life.
true.
That's true, very true. Number second is you've got to always, I know this is kind of an axiom that people say, but they have to deliver on it. You really have to under promise and over deliver. And if you do that and you work hard to do that, it'll lead to tremendous success. It'll lead to tremendous respect as well, because you're the person that will execute on what you say you're going to execute. And we had a discussion, Rob, before we started for a number of minutes, and we talked about honesty, delivering, doing what you say you're going to do, and how that leads to a perception of honesty and a trust among relationships, both in your personal and your professional field. So I think that's very important, and it's a good mantra for all people to hold. And if they can, I think they'll be rewarded for it.
Before you arrived in London, was there any boss or mentor on the work side that really stuck out?
It's interesting. You can work as hard as you can. You can have some bits of luck, but at the same time, you really need to find a mentor, a rabbi, somebody that could help push you on your career path.
Yeah,
Like I said, my dad instilled certain values, my mom to me, but that's innate traits. I was lucky enough after I graduated from an engineering school, I had no background in economics or finance. I
yep,
sat next to a guy on the train. His name is David Hendler, and he worked at Drexel right before Drexel went bust and then moved over to JP Morgan as a managing director. I didn't come from Harvard or Wharton or Stanford with any of the top
yeah,
degrees in finance, but I was a hard worker. I had a little different aspect to my life. I was doing technology. I knew a lot about computers when a lot of people didn't. So he gave me a shot to work in what we'd call the front office versus the back office, where all the computer people were. And
yep,
so I got an opportunity. It was that opportunity. So a little bit of luck, a little bit who you know, and a lot of hard work. I
yeah.
remember I was there some weeks, 70 hours or more.
It's look, I've always said to people, if you want to be the best at whatever you're doing, find someone who's the best in your mind, copy them, and then improve on it again. I
Yeah.
mean, most senior execs, if you ask them how you do what you do or how do you do it, they'll tell you. But if you don't ask, you're never going to know. And you were talking about what you haven't done. You had not from Harvard and all that. I know when I read most of the ultra successful people in the world, very few went to uni. Very few are brainiacs, as you would call them. They've just got there through hard work and surrounding themselves with the right people. And I think that's a lesson that we could all learn. So you arrived in London. What was that like?
So back at the time, it's an interesting story. All the big investment banks were bringing over all these Americans as expats because they thought all these Americans must know something a lot better than they did.
Yep.
And so they tried to bring the best and most talented in their views to London from all over the world to work. And then after a short amount of time, you realize that, and this again permeates life, um, life is based on relationships. Again, something, Rob, that we spoke a lot about before we went live today. It's those relationships that are most important. And it's those relationships that are ingrained. So people just because you bring over a bunch of Americans that might know the high yield bond market
Yeah.
a lot better than others doesn't mean they're going to be able to execute, because the people went to uni together, they went to private schools together before, and they're proper mates are going to want to work with people who are proper mates, not some asshole that came over from New York who thinks he's the best and brightest. That
Yeah.
doesn't work. It's
No.
the relationships. And I would say every country in Western Europe, it's about the deep relationships. It's about the same culture, speaking the same language. So if you didn't have those relationships, you weren't going to be successful. And I think people learn that relatively quickly. And fast forward a few years later, call it, come over mid to late 90s, by the time you got to 2000 or so, I think they realized, and many of those expat packages ended.
Yeah.
And the people that were successful were the ones that really had the deep and broad relationships pre-existing.
Yeah, look, when I'm doing sales training with people, I try to get through to them that people buy people, they don't buy the product. And what you're saying about having a relationship and building that trust very quickly is important. It doesn't matter what industry you're in. People don't realise that everyone's in sales. You don't have to be selling a physical product. I mean, you do finance for high-end people, and you go into big investments, but if you can't build that relationship and you can't see yourself, they're not going to come to you for money or advice. They're going to go to someone else that they feel as though they've got a bigger connection with. Would you say that a lot of the Americans that when they first came over, as you said, as expats, maybe struggled a little with European being a different culture and American being a different culture? New York especially is known for being brash, but every time I've been there, it's been the exact opposite. The people have been absolutely lovely. How quickly do you think a lot of them adapted to having to know, they're not the biggest and the best? They've got to prove themselves when they arrived in London.
Well, you remember, just like your country, right? America's a very big country, and I think gets a bad rap in terms of the cities. So clearly, the New Yorkers have a much different mindset and work ethic, I would say, than different parts of the country.
Yeah.
And not better or worse, just saying. So that kind of brash attitude in many cases, and that alpha type personality actually works to an advantage to some extent in terms of the work ethic of getting in 6, 7 in the morning, working to 6, 7 o'clock at night. That is not a traditional Western European UK mentality. No. So if anything, I think that mentality, that work ethic was definitely a positive that was brought over. However, again, I will go back to the relationships. You still have to have that relationship. And Rob, just talking about the world now and during the pandemic, everything you talked about just now, everything's sales, right? So pretty much if you want to like a person, whether you're on a date with somebody or you want to work with them, you can pretty much sum them up in 30 seconds if you think that they're what your thoughts are of them. And that's really hard to do on a Zoom chat these days versus meeting somebody in person.
Oh, look, I couldn't agree more.
I found the pandemic difficult in the fact that we are, humans are social beings.
Yes.
And so that not being to have that physical contact is difficult. But I think if you spend enough time with somebody, whether it's on a Zoom chat or have you, you can get a sense of their integrity and character. So I do believe that if you spend enough time on these Zoom chats, you can get to know somebody intimately enough to hopefully bridge that gap and help with in terms of that trust factor. But it is a little more difficult, and you definitely have to work a lot harder on it because we're talking, long distance relationships, and I can't reach in and hug you in terms of this Zoom chat right now.
How true.
I definitely can't share a proper beer, but we could definitely have our own here and toast to it.
Mate, I look forward to actually having a beer with you one day. I think it'll be an absolute hoot, as we say. Before we get into what you're doing these days and the world economy and all that, because I can't wait to pick your brains about investment and where you think it's all going to go and how we're going to get everything going again. What is the biggest difference in doing business between the Americas and Europe? Because you're based in both, you do business in both, mm-hmm. Two fairly different cultures, but you've got a lot of people moving from one side to the other. So how do you see it different?
Well, first of all, I'm at a family office, and our 5 families that represent the family office come from all over the world, every different continent. So I'm global in nature in that sense, and I've lived and worked all over the world. So from my point of view, again, it goes back to that relationship. It's about trust. And as we talked about before the call again, Rob, I'm very big on the no asshole factor. And I could sum up somebody in 2 seconds. I want to work with people that want to invite to my home, like you just said, have a beer, meet my family, have a drink, let's have a barbecue. and get to know each other. Those are the people I want to work with. People that I want to come invite to meet my family, spend time with my family, are the same people that I want to work with. I don't want to work with anybody else. And I have the ability to do that now. I want to work with good people and people that I could trust with the multi-generational wealth that comes from a multi-billion-dollar family office.
Yeah. So what does your office do and what do you specialize in?
So the Wimmer family office has a group of companies, I would say. We have 4 distinct businesses. We have Wimmer Family Office, which manages Per Wimmer's wealth and some of his close friends and some other high net worth individuals and families. We have Wimmer Financial, which is more of an investment bank or merchant bank that helps companies and other wealthy families buy and sell companies, strategic advice, etc. We have Wimmer Space, which is houses some of Per Wimmer's extracurricular activities. He's a founding astronaut with Richard Branson on Virgin Galactic. We have an expedition team that explores the depths of the ocean. So that houses his philanthropic and extracurricular activities. Our focus tends to be on metals and mining, oil and gas, natural resources, alternative energy, and real estate. And because we're a family office, we are very focused on ESG, or the environment, social responsibility, corporate governance, impact, and diversity. So when we see the terrible things that are going on these days in the States, in terms of the breakdown in society among races and religions and wealth versus the disadvantage, those are things that speak to our core as a family office in terms of making sure that the investments that we do are both ESG compliant and also, try to be as diversified and impact as possible and green.
That's true, mate. If you're looking at it now, I know it's very hard. I heard a quote that actually said, we can't go back to the way we were, we can only move forward to change. But with the coronavirus, to me, it looks as though it's a whole world reset of what's going to happen. What we did isn't what we do now. People are no longer working completely in an office block. They're working 3 days in the city, 2 days at home. Everything's changing. And it seems to me now the environment, when people have now stopped and look back on, you know what, we probably need to take a little bit better care of our world. But a lot of our wealth has been generated off mining. A lot of our wealth has been generated from, I don't know if the term's right, dirty business. But it's like in Australia, mining is really the backbone of the country, be it uranium, coal, iron ore, and all that. If you had to look at firstly at that industry around the world, when in 12 months' time, when with all good grace we've come through this and we're starting to regenerate into a world economy, where do you see mining going once the coronavirus is off? And if you look at, I'm looking at towards, we're going more towards more sustainable, more green technologies.
Well, look, things don't change overnight. That's clear, right? And many of the, people talk about battery operated cars, battery operated everything. The electricity that's needed to generate and to mine for the lithium that goes into batteries still requires some type of coal or other type of mining and electricity that's generated from that to power that exploration. So I don't think things are going to change too dramatically, let's say over the next 5 to 10 years in terms of what we've had traditionally done. But I think, and I know for a fact that the world is more ESG compliant, meaning that you're going to have to take a second thought before you invest in a mine or a mining operation if the impact on that is going to damage the environment, is going to damage the people that work in the surrounding area. So you're going to need to look at the liabilities that are associated with that, both quantitative and qualitatively. And I think, there's going to be much more of that emphasis than ever has been before because the world is watching. Now, as a credit analyst, fundamentally, what does that mean? As a research analyst, ESG has always been part, Rob, of my tool set. Environment. if I'm going to invest in a company, I want to make sure that the environmental liabilities that are associated with that company are well protected. Number two, if we look at social responsibility, we want to make sure we're investing in a company that is socially responsible as best as possible, even if they are in the mining space. And then corporate governance, you could have the best company in the world, but if it's run by horrible managers, that company is going to go bankrupt, right? So ESG investing has always been in my tool set, and it's always been in other people that are research analysts. However, in recent years, it's become the new sexy topic. But Rob, if I fast forward when the millennials are my age in their early 50s, there's not going to be something called ESG. It's just going to be part of their mindset to begin with, that proper corporate governance, social responsibility, impact investing. So, to answer your question, I think everybody's going to have to be more thoughtful in their investing approach. Many pensions, whether you're talking about Australia Super or the other larger pensions around the world, okay, are going to require the companies that they invest in, the funds that they invest in, to make sure that they have proper ESG rules, regulations, even credit ratings, you might say, before they do their investing. And if they're not ESG compliant, they're not going to be putting a lot of monies or allocations towards there. But like I said, it's going to take time. Things don't change overnight.
So how does someone like you balance out when you get a proposal across your desk for a country that I don't like the terminology third world, but are trying to lift themselves up, and they want to put a mine in, and it's very cheap labour. They don't have the same environmental safety regulations that a lot of the other countries do. It's an opportunity, but for that country and that area to lift itself. So you've got good and bad on either side. And so they put that on your desk. How do you balance out is the good outweigh the bad, or do you say, look, guys, you're going to have to put some benchmarks in before we actually go and source you some money?
Well, there's a couple of questions there, Rob. So first of all, Per Wimmer wrote a book called The Green Bubble many, many years ago. It was translated from Danish to many different languages. And so any socially responsible investing is not a philanthropic opportunity. Philanthropic opportunities, let that be with the people that are in their own pocket. As a money manager, I'm not paid to provide charity. So I have to make sure that whatever I invest in has a proper return for the risk that we're taking. So if there is not a appropriate return for the risk we're taking, we're just not going to invest in it, whether that's in a wherever that country resides, or if it's a mining operation or not. To the point of your question, look, we invest all around the world, including on the African continent. And we need to make sure the companies that we're investing in have the proper ESG compliance in place and the proper governance. Otherwise, we're going to be facing a problem. So we do a tremendous amount of due diligence before we invest somewhere. And we don't have to invest. We're not, we represent 5 families and their portfolio. So we don't have to invest. We don't have to beat certain indexes, right? So we have the opportunity to take a step back and see whether we want to actually do that investment allocation. And I think that's important. If I turned away from mining, Rob, to real estate, okay, if you think about it, and we talk about offices, which everybody's are shunning now, kind of like the same thing with the hotels and hospitality industry, particularly hotels that are focused on the office or the business traveler. If we look at the next 10 years, and literally the next 10 years, in the UK by 2030, and then in Western Europe, it's even more stringent. And I believe Australia is the same. Certain buildings have to have a certain standard of green. And that basically means they need to be, they have to be built to a certain standard. They have to be carbon neutral. And if they're not, it's going to be very difficult to sell that building. They're going to have to trade at a significant discount. And then a big company that wants to move there, like Google or Apple or a publicly traded company, they have to write about where their office locations are, and they're going to want to make sure those buildings are carbon neutral, green in terms of compliant, because they're going to want to write about that for their investors in their annual reports and for government and other regulatory agencies. So, they're not going to be a tenant unless the building is up to appropriate standards. So
Yes.
when I'm looking at investing in real estate around the globe, and, I'm investing, anywhere from 100 million to several billion on a per deal basis. And I've put to work, in terms of engagements and term sheets, over 5.5 billion since the lockdown in March. I've got to be quite cognizant, whether the buildings that we're investing in, the real estate, whether it's residential or so forth, are up to the proper standards, or will be up to the proper standards within the next 10 years, because that's the key dates.
I did notice one of your interests is hospitality.
Mm-hmm.
And looking at it from what you know in the hospitality industry, we're seeing the pictures of 30, 40 cruise liners now going in to be cut up as razor blades. The world famous Roosevelt Hotel in New York closing. And I've stayed there many times, and it broke my heart to hear that. What do you think is going to happen in the actual hospitality industry? Do you think there will be a seismic shift on investment and what they build, or do you think it might just go down as a bit of a lull and then come back bigger and better?
Well, I could actually answer that question both anecdotally and in terms of actual experience. So I sit as the vice chairman of the global hospitality group for the GRI Club. The GRI Club is a global real estate club, I would say, among C-level executives across the world. We come together and talk about challenges facing the real estate industry and different asset classes within that industry. But I am a large investor in the hospitality sector. I believe in the hospitality sector, and since March, I've put to work a lot of money, several $100 million, directed at different aspects in the hospitality industry. So first, I'm going to talk about a bifurcation. The office or the business traveler focused hotel is gone for a long time. If you could work from home, if you work on a computer, your human resources group at a big company is not going to sign off on you getting on a plane and traveling and staying in a first-class hotel. That's gone. If you have a hotel that serves not just the business traveler, but conferences, large conferences among people, that is going to be under a lot of challenges for the next several years, regardless of the pandemic. That is just one aspect of it. So the industry is under a structural change. The pandemic has accelerated those trends and accelerated the trends for a number of real estate things, such as retail, for instance. People shop online. So the retail, as we know it, has been in structural decline for 20 years. That has accelerated because of the pandemic. In terms of the hospitality space, I think tourism is still going to open up quickly. We saw that this summer after a lot of cities and countries started opening up. First thing people do is they pay their car, because you can live in your car if worst comes to worst.
True.
You pay your rent or mortgage, okay? And then you go on your vacation, because those are the three things that mean the most to people, realistically. So people are going to go on vacation, whether it's a staycation in terms of your local province or city or area around that. So the tourism industry is going to come back a lot quicker than the business traveler focus that. So I'm trying to focus my investments on tourism. And in that sense, it's on the very high end. So it's the Six Senses, it's the One and Onlys, it's the Nikki Beaches, it's the Mandarin hotels in the Caribbean and other areas where social distancing is important to the people. They're spending a hell of a lot of money per night to be away from everybody else. Okay. So that's the one aspect that social distancing is a part of. The second is, and you know this in Australia, when you have a lot of people coming from the Asian continent to visit their kids at the different various universities in Australia.
Very true.
Have the same thing in the States and in the UK. They want to have these kind of, not staycations, but want to operate in these extended stay hotels that have a little kitchenette, etc., so they can spend time with their children since they traveled so long. So those extended stay type of hotels will do extremely well.
Like you're looking at what we call service department hotels.
Exactly. And so my investments are going to be focused on the high end boutique-like types of the hotel space. the space that's the more this extended stay, as I mentioned,
Yep.
and also the larger operators, the Hyatts, the Mandarins, the et cetera, that have the wherewithal in terms of the liquidity to
Yep.
manage through the vagaries of the economic cycle, pandemic as well. But right now, particularly when we're looking at lockdowns again for the second time, and it's going to get a
Yeah.
lot worse as we get into the winter time, hotels can't operate at 40% occupancy. They can't. And
No.
many hotels are operating at 0 to 20% occupancy. So, Rob, they're gone if they have a prolonged situation with below 40% occupancy. So how am I looking at those type of opportunities? Well, I'm looking at if those hotels can be repositioned for residential or some other type of real estate asset class, since the hotel is not going to work. So the Roosevelt Hotel is not going to be a big hole in the ground in New York. It will
No.
be repositioned for residences or some combination of residences and other multi-use assets. And people that see that value now, contrarians, will likely several years hence be well rewarded for taking that risk. And that's a similar theme that I'm looking at across the globe.
What about the cruise industry? Do you see that coming back, or do you think it got too big and they built too many ships, and now it's all but gone in Australia? I mean, even though it generates hundreds of millions of dollars to our economy, it's going to take a long while for that to be popular again.
Well, you're right, and particularly from the scares that we saw in March when people were locked down on those cruise ships for
Yeah.
over a month or so and had to stay in their small rooms. So that faces significant challenges, but the bigger challenges are the fact that these cruise ships now cost upwards of $1 billion each. So the capex on some of these massive cruise ships are so significant and such a burn on the large companies that have them. They're all the companies that are public companies that have publicly traded debt and stuff. We're trading at pennies on the dollar because of this. Are those ships going to be worth liquidation value? So I think the cruise industry is going to take a long time. It will come back.
Yeah.
It'll come back just like restaurants and hotels with social distancing and proper
Yes.
protocols.
Yep.
And one space that I think is very interesting, Rob, is technology. Every crisis creates a different type of opportunity. So if you think about it, the real estate, the hotels, the cruise ships of the future are going to have a lot more technology. If your car has more data on you than your home or hotel, that's a big problem. So
True.
the hotel and hospitality industry of the future is going to have all these bells and whistles in the ceiling and walls, where they're going to know if Rob's temperature has gone over 101 degrees Fahrenheit,
Yes.
and therefore they're going to have to call a paramedic because something's wrong with COVID or something else. So your body is going to be monitored by smart hotel rooms. You're not going to see a pretty girl or handsome gentleman checking you in anytime in the near future. It's all going to be done on an app on your phone. You'll be able to pay and order room service all through that. You'll be able to enter through that. So technology focused on the hospitality space is going to have significant upside in the near future. And those companies that are focused on that are going to really benefit from that. And I'm looking at trying to figure out ways I could leverage those opportunities as well.
We're already seeing hotels in Sydney that are, you basically walk in, hit the pad, it sends you the key, it tells you which room to go to, you hit the barcode, you go into your room. And people said that's fine if you're going for a one night stay or a couple of nights on business, but they still want to talk to someone. They still want to be. It's going to be interesting to see how they get the balance between customer service and managing things like the viruses, where it's going to check your temperature as you walk in. I was reading an article with one of the airports overseas is trialing one of those scanners that it scans everyone as it walks in and scans the temperature straight up. And it can actually highlight someone who is borderline for them to go and check their temperature to make sure that they are well before getting on a flight. And it's almost scary to think that this pandemic is allowing Big Brother to get a little bit bigger than what it already is. But for us to live a life, I think we're going to have to accept a few challenges to our liberties, because the result could be where we are back now. And I don't think the world economy could probably survive another hit like it has for the last 12 months. Real estate in London and Europe and around the world, do you see the coronavirus having much of an effect long term, or do you think it's just going to be a short blip? Because I know in Sydney, it hasn't really dropped. The real estate industry stayed pretty solid, mostly because not many people are selling. So buyers are outstripping what's around. But what do you think around the world? Do you see it bouncing back quite quickly?
Well, first of all, I want to address a couple of things that you mentioned in terms of the person going to a hotel room and not having human contact and being lonely. So anything, the pandemic has definitely had a very meaningful social impact, as well as an economic impact on people. Look, I haven't seen my parents for over a year and a half now. They live in New York, and because it's just too dangerous for them, not for me. And I haven't seen my 3 boys that live in New York since before the lockdown. So that's been hard. And imagine if you're a single person or an older person and don't have family, it's definitely takes a toll. And as I mentioned in my comments about the business travel is going to be very different in the future and really not going to happen anytime over the next 24 months. Human resource departments are just not going to allow it when it's just more efficient to just have these Zoom chats. So the business traveler is obviously going to be lonely if they're lucky enough to be able to travel. So most of the travel in terms of human contact is going to be, as I mentioned, tourism, and you're going to be with your family or significant other. So I think that human contact will be there. In terms of your comment, look, I'm investing billions of dollars around the world in real estate, and that's the heart of what I do on a daily basis. I sit in this chair from 7 in the morning, sometimes to 11 o'clock at night, talking on Zoom and to clients and prospective clients and stuff. If we take the pandemic out of the equation and just look at what it was, a catalyst for an economic downturn. I wrote a paper back in March for MIPIM, one of the larger real estate companies around the world, organizations. And it was called The Social and Economic Depression of 2020. I'm happy to share that too with you, Rob, and your,
awesome.
your participants. But I talked about not just the economic crisis, but the true social impact of the pandemic. So we already know the social impact, the humanitarian crisis, but now there's an economic crisis. So now we're facing a typical economic crisis that we see pretty much every 10 years or so, right? And so 2021 is going to be a continuation of the economic dire situation that we had in 2020. I would not compare it to the global financial crisis, which was basically a housing focused crisis and one that was focused on the banks. Here we're seeing all components of aggregate demand declining: consumption, investment, residential, export and import markets, et cetera. So the economies are facing declines of 20, 30% plus in certain locations. That's not going to change in the first half of 2021. So the real estate market, just from historically, cannot be going up and away when the rest of the world economy is dropping precipitously and unemployment is rising exponentially. So there all this talk, and I'm seeing it. People in New York go out to the wealth, if you can afford to, go out to the Hamptons. I'm sure if you're living in Sydney, there's places in the suburbs you can go where people vacation, and those homes are going up and away because people want to have a proper garden. They want to have a proper space than sitting in a flat on top of other people. So there is that initial kind of momentum that we're seeing, but that'll tailor off because that's just a blip. Because we're facing a prolonged economic slump, at least for the next 12 to 18 months, regardless of whether a cure is found or an antibody, et cetera. That takes time to distribute and time for it to work. So you're looking at least another 12 to 18 months of declines in economic activity, rising unemployment across the globe, which will have an economic impact. And real estate prices will come down. Now, if you're looking at major cities like New York City, prices are down 15 to 20%. Okay, at a minimum. London, the same thing. Now, areas outside of New York City, outside of London, look, I invest in Perth, Melbourne, Brisbane, etc. So the inner parts of the city are facing pressure, and that's across the office space and pretty much every asset class. That will likely continue.
Yeah.
Okay. But there will be a residential impact as well, even if the suburbs are under what we call a temporary blip of activity as people try to, relocate their lives. And eventually, you talked about the short term versus the long term. Medium term, the big cities will come back. People want to work in office spaces. They want to work, they want to have that collegiate atmosphere.
They do.
Companies are not going to just allow people to work from home all the time. So they will come back. The big cities will come back, just like we've seen time and time again in different crises going back to, World War I, World War II, et cetera. So they will come back, but each asset class will have its various challenges. But I could say with a lot of experience that and experience over the last 35 years that prices will be under pressure over the next 6 to 12 months. And that will lead to opportunities for people that have the capital and funds that have the capital to take advantage of opportunistically of those declines in prices. And also, to some extent, actually helping. The small and mid-sized business, Rob, are going to be hit the hardest, whereas the big companies will benefit from government schemes, access to capital markets, et cetera. The small and mid-sized business, the average person, we're talking about the average person here on your show, is the one that's going to bear the brunt of this economic and social crisis that we're facing.
I've seen firsthand in Australia, there seems to be two different types of businesses. One that is stuck its head in the sand and is come back exactly as it was when it left, and they're struggling. And the ones that have pivoted and have gone, you know what, we've got to reassess our market, we've got to reassess our customer, what they want and how they want. Do you see that at the big end of town? Now I'm talking about medium businesses there. How do you see the major companies around the world handling what's going on? Are they quicker or slower to react, or are they just being cautious on where and what's going to happen within the markets?
Well, first of all, the large companies, the public companies, not the mid-sized companies, but the larger public companies around the world on the FTSE, 100, the Dow Jones, the S&P 500, et cetera, the local Australian index as well. Those companies have unprecedented access to central bank liquidity in terms of the ability to issue investment grade bonds, high yield bonds that the central banks are actually buying and providing them liquidity. The larger companies also benefit from large and established bank relationships. If a bank has $1 billion out to National Australia Bank has $1 billion out to one of your large mining companies, okay? They're not going to allow that company to default on their loan. They're going to try to figure out a way to refinance that loan, because otherwise it's going to have an immediate impact on that bank's balance sheet. Okay, so the larger companies have this unprecedented ability to tap capital markets in record size than they have been in recent years because of this central bank liquidity that's being provided. They're also benefiting significantly from other fiscal measures. So large companies are doing fine in terms of their ability to remain solvent and to also have liquidity to get through the crisis. The small and mid-sized companies, some are benefiting from the local government schemes that have been put in place to benefit them, but they're band-aids that might help them get through for the next 3 months or something to be able to pay their mortgage or their landlord, et cetera, or continue to pay their suppliers. But eventually that will end, and those companies will go bankrupt because they're just not that significant of a relationship to the banks, nor do they have the access to capital markets, which goes back to my point. We are facing a crisis much worse than we saw during the GFC in 2008-09. And the best example is the Depression in the late 20s, early 30s.
So knowing what you know and dealing with the big companies, and you see the flow-on effect downwards to the small and the medium companies, to the mum and dad investor who is looking to advise their super fund or their investment fund, where to put their money or what to do for the next couple of years. So they at least try and protect as much of their capital, let alone make some money on it. What would you say to them?
Listen, I'm horrible
That's okay.
because
Be
as a
honest.
personal investor. So my parents asked me, what should we do in March? I was like, get out, go into cash. Why would you be in the stock market? Why would you be in the bond market? You're in your late 70s. Are you crazy? So they sold everything that they had in their pension funds, moved it into cash, and we had the best rally over the following 3 months. Now, my parents haven't picked up the phone and spoken to me ever since. So that was horrible advice for them. But, it could have gone a different way. And that was only because of the unprecedented measures that central banks put in terms of providing liquidity into the system. It could have gone a vastly different way. So, look, my view is if you've had the opportunity, you were wealthy enough to put some money, had some money in your pension plan or in your stock, in stocks, and you've written up the rally that we've seen since March, take it out and put it into cash for the at least for the next 6 months, because we don't know what's going to happen over the next 6 to 12 months in the economy. But, the market is at an all-time high, and the economic fundamentals just don't justify the earnings potential of the companies. You just look at, various valuation metrics, price to earnings metrics in the bond market, things trading at par or above par that shouldn't be. I would say take some money out, put it into cash because you've made some. And again, I could be wrong, but I'd rather be conservative, particularly if you're talking about, people that don't have that discretionary money. If you have discretionary money, there's going to be more money made in the next 12 to 18 months that has been made in a short period of time than made in generations. Let's say it would take 20 years to make what you can make in the next year and a half. If you have that liquidity to invest in a private equity fund or credit opportunities fund, they'll be able to take advantage of the distressed opportunities facing many companies around the globe.
So what does, I'm going to switch total tack here. You turn your phone off, you go home at night, and it's the weekend. What does Peter do to relax?
Well, my wife tells me I never, ever, I go to sleep, she says, with my phone on my hand, and she doesn't know if I'm actually working or watching a Netflix movie, but she usually knows that I fall asleep when the phone falls out of my hand. So the phone is glued to my hand. It's a problem, and I got to get better at it. And it's not always work related. I try to watch, Netflix shows and catch up on that. But with 3 daughters under 3, I tried. Listen, this pandemic has been a mixed blessing for me. Haven't been able to see my 3 boys that are all grown up back home, or my parents, I mentioned, friends back in the States. I used to travel there every 6 to 8 weeks. But instead of going into the office every day, as I have been prior to the pandemic, I'm at home. I get to eat breakfast with my 3 little girls.
Awesome.
I get to take them to swimming classes. I get to play with them and look at their little costumes that they have on. And as long as the pandemic doesn't shut down France, I'm going to take them for their birthday next week to Disneyland in Paris. So a few days. I'll have to quarantine on the way back. So I've had a much more meaningful time with my girls than I otherwise would have had. And more importantly, it's not all about, money and making money and sitting here. I have a quote that's been widely put out there. It's called "Success is determined by the individual." And for me, success isn't about monetary wealth. It's about the quality time that I get to spend with my family. And I truly mean that, as well as my friends and colleagues. So I've spent a lot of time on these Zoom chats talking about the trials and tribulations in my life and trying to be an inspiration to others. But I've also spent a lot of time talking about diversity and inclusiveness, given the horrible situation that many cities and people are experiencing in the U.S. And I've had some conferences about that and talked about that. And, and I think if anything comes out of this pandemic, if people can be more empathetic to others and put their situation into the shoes of somebody else, whether that's their race, color, creed, etc., I think if anything come out of this pandemic, maybe humanity becomes a little more empathetic to each other. And if that could be the one good thing that possibly could come from this pandemic.
So before we wind up today, I've got two quick questions for you. In business, you've run the roller coaster of business, and you've had a time when, like all successful business people, where you didn't know where the next buck was going to come from, and you had pulled yourself up and got out of it. At the lowest point, as you call it, financially lowest point, how did you, or what did you tell yourself to say, you know what, I'm going to get out of here. I'm going to be successful again.
Listen, I've had many ups and downs in my life. I had to reinvent my career many, many times.
Yep.
And I would say probably the lowest point of my life was going through a very terrible divorce,
Yep.
custody battle. And at the same time, both of my parents experienced heart attacks, maybe related to that divorce. And
Yep.
at the same time, didn't know whether the debit card was going to work to buy groceries and nappies for the babies. And so I spent a lot of time basically relying on family, friends, colleagues, reaching out to people, and just having faith that if tomorrow's not going to be a better day, next week's not going to be a better day, maybe next year will be better. But what else is the alternative? You got to pick yourself up. You got to get up, put a smile on your face, dress to impress, and just get the fuck out there, because otherwise you have there's no, what else is there? I have 6 kids. I got to support 6 kids. And so, you have to just put a smile on your face as best you can and get out there, because there is no other alternative. And so I tell my kids, my older kids just graduated uni. One can't find a job, and he went to Dartmouth, and the other one graduated Indiana, and he's got multiple jobs. He goes, Dad, I'm not sure if I like my what I'm doing right now as much as I otherwise could be doing. Suck it up. The rest of the world doesn't have a job. You're lucky to have a job. You might not like what you're doing right now, and then for my other son that doesn't have a job, I'm saying, listen, take this time in the pandemic to find out what you truly are passionate about, and try to focus on what you're passionate about. Because if you're passionate about something, you'll never work a day in your life, because you'll be excited and to get up and work each day. Now, I know it might be somewhat hypocritical and something like that, but if you do have the ability to spend some time and take some time and think about it inner-wise, it could help you quite significantly in the longer term.
I suppose you sort of probably half answered the next question, but the final question I'd like to give people is, if you're walking through Times Square now in New York and you come across the 20-year-old Peter, and he looks up at you and says, "Oh, g'day." And what would you say as a bit of advice to the 20-year-old Peter, looking back on all the fun and the ups and downs you've had in life so far?
Well, first of all, if I'm walking in Times Square, it's unlikely somebody's going to say good day. Australia, like yourself. But if they did, I'd probably be more likely to speak to them, because I know they'll probably be a more friendly face than somebody else that's walking up to me in New York. However, in all seriousness, I would basically tell them, listen, 3 things. 1, relationships are most important. So if you're looking for an opportunity, look through your family, friends, your friends' parents, where you went to uni, if you were fortunate enough to go to uni, people you met there. Go through I'm dating myself, Rolodex or your contact list, whatever, right? And see who you know. Relationships are most important in life. That's the number 1. Number 2 would be, once you have that opportunity, if you're lucky enough to find a job for that person, work your ass off. And basically, as you mentioned, Rob, at the start of the call, under promise and over deliver. It's so important. And also, I would say, be a man or lady of your word. If you say you're going to do something, do it. Because all you have in life is respect and integrity. And if you lose that, it's going to be difficult to come back from.
Well, Pete, that is awesome advice. And there's nothing you've said there that I could possibly disagree with. It's been a real pleasure listening to you, especially your thoughts on the world economy. You're speaking from someone who has authority and experience in what's going on, which means a lot to my listeners. And I think people need to take heed of what you've said, do their research, as you say, and be true to themselves. I mean, you stay safe over there, you and your family. Be healthy, and we hope to catch you soon.
And Rob, listen, I'm anybody wants to contact me, I have my website, peterplaut.com. Find me on Wimmer, find me on LinkedIn, Facebook. I'm happy to talk about my trials and tribulations. Rob, it would be an honor to have you and your family come and stay with us in Wimbledon and London. And hopefully when the pandemic subsides, I'll be able to visit you in your home country as well. So thank you. It's been a pleasure and an honor.
Thank you so much. And if I will put all your web and all those details in the show notes for anyone who wants to look at. And if they can't find you, let me know. Mate, as I say to all my guys, have a groovy day.
Thanks, Rob. Cheers.